Shanghai just printed a silver vault number that literally made my jaw drop on Friday. And while the mainstream media is acting like it's just normal market mechanics, I'm telling you right now, it's anything but normal. I wasn't even going to make this video today. I was literally halfway out the door, shoes on, staring at my phone asking, wait, did that really just happen? I stood there thinking, why is nobody telling you what this actually means for your money? It annoys me because the loudest headlines are giving you the lazy explanation, and I think you deserve the full story. Today is Monday, February 9th, 2026. If you're watching this, you are witnessing a moment where the global financial plumbing is starting to leak in a very big way. We aren't just talking about numbers on a screen, we're talking about the physical metal that backs the entire digital world, from your smartphone to the solar panels on your roof. If the silver is disappearing, the game is changing. If you value this kind of deep dive breakdown, hit subscribe and join the community. Let's get into the why behind this madness. Here is the punchline. The reported silver sitting in the main Shanghai futures exchange warehouses slid to just under 350 tons on Friday. This wasn't a gentle drift lower. It was one of those moves where you blink and the number changes like someone yanked a tablecloth out from under a dinner set. The day before, it was over 400 tons. We are talking about a 60-ton drop basically overnight. Now I know what you're thinking. Damien, why should I care about a warehouse in China? Here is why it hits your pocket. We live in a world where the price of everything, from your tech gadgets to your investment accounts, depends on price discovery. Right now, the market is screaming in two different languages. In the West, silver is being quoted at one price, but inside China, people are paying a massive premium, sometimes $10 to $20 more per ounce. When the world's manufacturing hub is willing to pay 30 or 40% more for a metal than the rest of the world, it means they are desperate for the physical stuff. This isn't just investing, it's a fight for resources. If you have savings, if you have a retirement account, or if you're looking to buy a home, these glitches in the system are the early warning signs of a massive shift in purchasing power. Let's talk about how this actually works in 2026. China isn't just a sideshow anymore, it's the main arena. Their contracts are physically deliverable. In the West, most people own paper silver, ETFs, futures, digital promises. That is fine until everyone tries to leave the same door at the same time and realizes there are not enough bars to go around. Recently, we've seen silver-linked products in China repeatedly slamming into their daily limits. Trading was literally paused because the pricing got so disconnected from reality. This tells you the system is under extreme stress. Why is the warehouse being drained? Because people don't want exposure anymore. They want the bars. They want the metal they can touch, hold, and use in factories. Think about the world right now in February 2026. We've moved past the Chi AI hype and into the AI infrastructure phase. Every single data center, every advanced sensor, and every new electric vehicle requires silver. It's the most conductive metal on Earth. You can't fake it and you can't print it. But there's a darker side to this analysis. The billionaire short. There are rumors of massive short positions, players betting the price will go down, who are now trapped. If the vaults are empty, those shorts can't cover their bets with real metal. This creates a short squeeze potential that could make the 2021 meme stock craze look like a playground fight. When the big players get desperate, the price doesn't just go up, it teleports. So, where's this headed? Over the next 6 to 12 months, I see 3 distinct possibilities, and none of them involve things staying normal. First, the long drain. If Shanghai continues to lose 50 to 60 tons a week, the exchange will eventually hit a critically low level where they might have to suspend physical delivery. If that happens, the China premium will explode, pulling silver out of London and New York vaults at a record pace. Second, the manufacturing panic. We are already seeing tech companies in 2026 trying to secure their own supply chains. If Apple, Tesla, or Samsung decide they can't trust the open market for silver, they will start hoarding. Hoarding by corporations is what turns a tight market into a total stampede. Third, the macro shock. With government debt at all-time highs and people losing faith in paper currencies, silver is being pulled as a hard asset trade. It's no longer just a metal for factories, it's a metal for fear. I expect massive volatility. We might see the price chop sideways between $60 and $80 for a few weeks, which feels huge to normal people. But for silver, it's just a Tuesday. However, once that floor is established, the sprint to triple digits becomes a very real mathematical probability. I don't want you to be scared. I want you to be prepared. Here's your 2026 silver stress checklist. First, check your exposure. Do you actually own physical assets or just price exposure? If the plumbing breaks, having something physical in your possession is the only 100% hedge. Second, watch the lie detector. Don't look at the New York price. Watch the Shanghai inventory levels and the China premium. That is the real heart monitor of this market. Third, audit your tech stocks. If you own companies that rely heavily on silver, like solar or high-end electronics, check if they have long-term supply agreements. If they don't, their profit margins are about to get eaten alive by rising input costs. Fourth, avoid the mushbak mori moons trap. Do not buy when you see silver to the moon trending on social media. Buy during the boring weeks when the price is chopping sideways. That's when the smart money reloads. Fifth, fix your position size. Silver is a bucking bronco. If you can't sleep at night because of a 10% move, your position is too big. Size it so you can stay in the game for the long haul. And finally, stay informed, not hyped. Filter out the clickbait. If a headline says silver is over, check the vault numbers. The numbers don't have an agenda, people do. Listen, the next week is going to be telling. If those Shanghai vaults keep bleeding, we are entering a new era of physical supremacy. You have a choice. You can be the person who reads the headline after the price has doubled, or you can be the person who understands the plumbing before the pipes burst. What do you think? Is this Shanghai drawdown just a bookkeeping glitch, or is it the start of the greatest physical squeeze in history? Tell me in the comments. I want to know if you're watching the inventories or the premiums. If you found this useful, hit that like button and share this with one friend who still thinks everything is fine. With the global markets, stay sharp, keep your eyes on the data, and remember, in a world of paper promises, the one with the metal makes the rules. I'll see you in the next update. Don't wait for the official news. By then, it's already too late. Action beats anxiety every single time.